What a day it has been for markets. Nifty has reclaimed its 20K mark and in style staying put. Market cap of Indian equities has crossed 4 trillion before our GDP has hit there. We've become the world's fifth largest equity market. The question now, of course, is where next from here? Can we hold at these levels? Is the peak much higher? And what do you do next? Vikas Khemani is joining us on this special broadcast and for this conversation. Vikas, great to see you and great to chat with you on such a big day. Is it just a number or is 20K now more than just a number?
Hi, good to see you. I think it is just a number. According to me, India is on a very, very glorious journey, transformative journey. As its economy grows from here. We've been saying this for quite some time, right? Whether it is 10,000 Nifty, 15,000 Nifty, 20,000 Nifty, it's a small padav in that whole journey, but the journey is long way. Uh, Indian economy will become $5 trillion economy and $7 trillion economy and $10 trillion economy in times to come as we progress over next 10, 15 years. I think truly, we are in as the Prime Minister calls it, Amrit Kal funds over next 25 years as India moves away from, emerging market to a developed nation. I think that many such milestones will keep coming and we will keep celebrating with you. And that will be, that is true testament of our journey for Indian capital markets as well as the Indian economy. So I'm quite bullish, on economy as well as the market. And this is according to me just one more, number in a long journey of Indian capital markets.
Well, age is just a number. For Nifty, 20K is just a number. The question is, can this number sustain? So now when we talk about, especially the indices, heavyweights have not participated as much. Banks, for example, have not participated as much. A lot of the excitement in the markets has been seen in the broader markets. Do you think that that's a clear indication that there's more to come? There's more steam left in this rally?
It really depends on what time frame you're looking at. We are quite positive. See, there will always be intermittent cycles, corrections, phase. There will be times when large caps are doing well. There will be time that broader market would be doing well. This is a part of the journey, right? No journey is one way up. It's always, it's up and down kind of journey. That's how the markets work. And I do think that there's a lot more steam left. Both and India is actually one of the very exciting story from the point of view. It's very well diversified. The width of the growth which is coming through in this transformative phase is far higher than it has ever been. I say this, in my 25 years of career, I haven't seen where all sectors are firing together. Right today, you can't say which sector is not firing. Right, banking is doing well. Manufacturing has picked up significantly. Your IT is doing well. Your capital goods are doing well, real estate is doing well, infrastructure, we all know that there's a massive infrastructure being spent, being have done, and that's creating huge amount of ripple effect on the whole economy. Your startup ecosystem is doing well. So it's a very well-rounded consumer is of course doing well. It's very well-rounded growth across the country, and when this kind of things happen, the sum total is never 1 plus 1. It is always the amplifying effect of this is far more higher, and that is what the beauty about this journey. Of course, in this journey, nothing goes one way. There will be some sectors which will take a pause for a few quarters, maybe 1 year, maybe a little longer. So those kind of things, as an investor, we have to navigate. But journey definitely is looking upwards.
In terms of profit booking, or terms of how to navigate the shorter term play, do you think that it is time to book some amount of profits? And what about those who've been waiting on the sidelines, waiting for that correction to come in?
Those who've been waiting for the sidelines will probably keep waiting, because when the correction comes, the same class will get scared even more. Today, let's say 20,000 is there, but if somebody was waiting from last 20,000, the markets went to 18,800. How many people of those have invested? No, because when it is 18,800, they will wait for 18,000, because there's a reason for that correction, right? So one has to take a asset allocation call on Indian economy, Indian equities from a very long term perspective. And when you take a long term perspective, your temptation to book profits in the shorter term sort of goes away. I can tell you, I mean, we will discuss now whether that is 3 years, 4 years, 5 years from the now. I don't know. It's a time frame, right? but we will discuss 50,000 Nifty, we will discuss 60,000 Nifty, on your very channel,
Yeah.
sooner than later. And when that happens, this short-term correction, short-term profit booking becomes irrelevant. Big money is being made when you remain fully invested through the thick and thin. And that is how most of the successful investors, that is how most of the retail investors who've been investing into the market through SIP without worrying about profit booking have created wealth. So the real secret sauce of creating wealth is to remain patient and remain invested.
So let's talk about the next few days, only because there's a big trigger coming with 5 state polls. And that, in a sense, people are waiting for because they're seeing it as a semi-final for 2024. Now, there have been a variety of assessments of the impact of elections. For example, Jeffries says that you'll have a 30% drop if there is a different outcome than what the market expects in May next year. And you have many such assessments. What is your assessment, A, for 2024 in terms of whether there is a big risk factor if there is a different outcome than what is expected for the next week coming, say Friday morning once you have exit polls, next Monday when you have results coming in? How much of a factor is that going to be in how markets play out?
इसको सब पता है. Despite elections coming through today, you are hitting 20,000, right?
Yeah.
It tells you that markets are not worried about. It tells you that markets are not worried about the impending state election outcome, right? Otherwise, it should not be up 150 points today, right? So I think one thing is very clearly that state election outcomes are kind of factored in right now. What market is expecting one state to BJP, rest is not non-BJP. So if anything positive can be positive for the market, anything negative can probably will be absorbed. But more importantly, I think there's a very clear distinction between state and central elections. Right now, markets are not prepared for any change in the central election. And I think by and large, the hypothesis is that BJP government will come at the center, which I also believe that there's a high probability that they will come. In politics, you never say never, but I would believe that there's a very, very high chance that they will come and hence that continuity is what market is right now assuming. And that's a fair hypothesis to work with. Uh, if and there are a lot of people who are waiting, or there are some people who are waiting for that election outcome to happen. So if you're waiting for that, you will also have to pay price for that, because markets won't be available where they are today once that clarity is uncertainty is gone. So there's a price to be paid for the uncertainty, and one has to take the call based on the probabilities. I believe that we should remain invested. We are in a very, very big transformative phase India is going through. I don't think there is major risk towards that.
In terms of foreign investment participation, it's picked up now in the month of November, but again, a lot of money on the sidelines. Now that you're seeing benign global factors, US Treasury in a good place, you're seeing crude, all right, in a 2% up-down range, but not a big pain or not a big scare right now. Do you think that foreign money is going to come in, or is there going to be a wait and watch for election results? Also, the view and one narrative you hear that India is a great market, but it's an expensive one right now.
So I think there's a lot of money waiting. I don't think money is waiting for the elections only. I think foreign money comes because of, I mean, largely gets influenced by the interest rates factors. Last 3 years, we have lost almost $45 billion of, foreign flows because Fed was raising interest rates. Now those interest rates are peaked out. The moment there is a talk or discussion or expectation or movement about that coming down, you will see hordes of that money coming back towards emerging market, including India. And India happens to be one of the most promising market across all emerging markets. So I feel that when money comes back, it will be much larger proportion than it has ever been. And also, you must know that India is significantly underrepresented in global portfolios. The global market cap is $115 trillion. GDP is about $85 trillion. India GDP at $4 trillion should have at least 5% of the global portfolios, if not more. And I think there's a case for being overweight. So currently we are nowhere close to that. So I see over next 2-3 years, massive amount of flow coming through. The start will happen when the interest rate starts coming down, and that will rest the worry about the valuation aside. Because today when Nifty is trading at around 20 times price to earning ratio, which is around 10-year average, I do a situation when in next 3, 4, 5 years, I don't know when exactly, but there will be time when Nifty will trade anywhere between 28 to 30 times P. And that will be probably a euphoria or kind of bubble kind of situation. Today, I don't think we are anywhere close to overvaluation kind of trajectory.
Okay. Okay, we're still waiting for the 4 trillion on the GDP. Market cap to ho gaya, GDP ka intezar hai, and I'm sure it's just
GDP भी हो गया, GDP
a
भी हो
matter
गया.
of time. No, there is no official figure. Tomorrow GDP quarterly numbers will be out. Maybe we'll know. We're still waiting for the official figure. But yeah, that is an assessment. But I want to get a little more specific. Sectors, stocks, mid caps, small caps is where the action is going to be, and top picks if you'd like to share.
So I think sectors, I mean, we've been very, very positive and bullish on banking and financial services because no economy can, grow without growth of banking and financial services. So that's natural. That's going to happen. Manufacturing is something we've been super bullish about for the last 3 years. We continue to remain that. We think that that's a 10-year trend. India will, it is similar to what IT was in mid-90s. So you will see a massive amount of wealth creation and growth coming through in the manufacturing sector. Capital goods, again, very, very, investment cycle has just picked up. India will spend $1 trillion in next, 5 to 7 years on infrastructure alone. More than that, capacities are getting built. The order book of most EPC companies and capital goods companies are, doing very well. So, sector to watch out. Pharma will do very well. So, frankly speaking, there's a very, very, wide, choice of sectors to pick the stocks from. And, as far as the market cap is concerned, again, each investor has to decide based on the appetite. And but I think broadly there will be good money to be made, structurally speaking. In a structural bull market, mid and large caps, mid and small caps make slightly more return than the large cap naturally. And in the bad markets, large caps outperform small caps. So given the fact that we are in a structural bull market, and I'm talking about a very long horizon. I'm not talking about next 3 to 6 months. Small and mid caps will outperform, Nifty for sure. From a 5 to 10 year perspective, and it has done in the past as well the same thing. So that will continue and that will play out. So again, I would always say that allocation to the market cap could be depending on the risk appetite of the investors and the time horizon of the investors.
Any favorites there in mid caps?
I don't want to comment on the stock specific, but some of these sectors, themes which we mentioned, will do well.
Just one last word from you on the IPO frenzy that we're seeing. We've had one listing today. Tomorrow is going to be another set of listings. The kind of subscriptions which have come in, the kind of listing pop expected to see now, a fresh pipeline of IPOs also coming in. What is it telling you about the health of the market when the primary market is buzzing to this extent?
I think primary market doing well is a clear function of secondary market doing well, right? And what we are seeing is right now, good IPO coming through, and that's a good thing because if no new IPO in any growing economy, diversifying economy, new set of companies come. It's like this: 5 years ago, no manufacturing company would do IPO. Today, a lot of manufacturing companies are doing IPO. So it's a function of opportunity space opening up in any economy. And today, India is opening up a lot of new opportunities, and that's the reason you are seeing interesting ideas and businesses coming to the market. So I'm not worried at all about it. The only thing is when you get to a situation where the poor quality companies also get, successful in IPO market, and that is the kind of point of worry. I don't think we are yet there, but I'm sure we will get there soon. So one has to be very careful about in IPO also before investing, about the quality of the business, quality of the promoters, and of course price you pay. And many times I have seen in the frenzy, IPOs get listed very well, but in the next 6 to 12 months' time, you get them in a good price, right? Because ultimately reality dawns upon the euphoria settles down. So if you find, we generally, whenever there's a euphoria, we stay back and we don't participate. But right now, we think that there are good companies at a reasonable price coming through. I don't see a bubble at this point in time, but sooner than later we'll get there.
Any you like currently in the current crop, or which you have participated in, or you've kept away from all?
Like I said, I will stay away, but there's a public knowledge. We participated last in the flare pen and writing instruments, I think, yeah. But other than that, yeah.
All right. Thank you so much, Vikas, for joining us on what is definitely an exciting day and sharing with us your outlook for where markets are going to be headed. Vikas Khemani saying that 20,000 is great to celebrate, but it's just one milestone. There are many yet to conquer for the Indian markets. Thank you so much.